Hi there, welcome to today's live seminar with myself, Gavin Holmes. I'm the author of Trading in the Shadow of the Smart Money. More about me in a minute, but delighted, nice surprise to have with me my very good friend and colleague and former fund manager from the UK, Philip Friston, who's up in Yorkshire in the United Kingdom, for those of you who know that area. Very beautiful area, and actually probably a little bit cooler than the place where I'm at the moment. I'm on the seaside town of Lymington, which is on the south coast of England in the New Forest National Park. Today we're going to be looking at charts, we're going to be talking about some of our strategies, and we're going to talk about why August could be some of the best trading we've ever seen in the summer, ever, because a lot of things are setting up. Most of the time during August, I tend to take a vacation or go away. This year, it's not happening. I've decided to cancel. I actually told my wife I've cancelled our vacation. Not in the good books for that, but there's a very good reason for it, because the opportunity in August could be absolutely massive. And most of the retail public will be on holiday on a beach, quite rightly, it's up to them, but possibly missing some good opportunities. And in fact, I've been asked to participate in a book that's being created and will be available in the next week and a half, I believe, all about some of the opportunities that are going to be happening during the summer months. And we're already in the middle of summer, and there's still been great trades in gold, British pound. Most of you who follow my work know that I've talked about gold potentially going to 1200 and below. When I did my last webinar, it was short from 1230. And I've got a trade that we'll talk about today. So before I start, I do want to read to you a very important disclaimer. Trading stocks, options on stocks, futures, options on futures, and retail off-exchange foreign currency transactions, known as Forex, involve substantial risk of loss. It's not suitable for all investors. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures, or Forex. Therefore, you should not invest or risk money that you cannot afford to lose. Now, we have a very big turnout here today for an event in, well, what is the end of July, but I'm not surprised because of the amount of information that's coming out in the news media about cryptocurrencies, about gold. Gold has made a one-year low. I talked about this several times, and now I've been getting trade alerts coming in consistently through our new, well, it's an email service from our charting software that tells me when that gold price is being marked up. So for those of you that are brand new to this, you don't know anything about TradeGuider, you've just come in because you've just joined us in our database last week. As I say, a record entry into our database. Let me first of all introduce myself, Gavin Holmes. I'm the author of Trading in the Shadow of the Smart Money and the Complete Volume Spread Analysis System Explained. And we are opening a public fund in Gibraltar. That's our intent, of which I will be the head trader, and we'll be able to start hopefully trading that. We're hoping sort of October, November, depending on the results so far of the negotiations we're in. But the idea is that the fund itself will be trading initially the crypto markets, which I'll be studying very, very closely. I have to admit that I'm surprised at the amazing accuracy of the indicators in VSA when we look at, and I'll show you some of these in a minute, in Bitcoin, Ethereum, Kraken. I was very anti the whole crypto market a year ago because I didn't understand it. But now I've started to study it in a bit more detail. I can see that there is a future there, a bit like when the internet came around, and I was working in a computer firm for a little while, and the fellow showed me the internet, and he said, you can go and search this and find that, back in 1996. And I said, well, no one's going to use that. No one's got, a lot of people don't even have laptops and stuff, but of course it's taken off, and now we've got smartphones. But today is all about understanding charts, and I'm going to show you a system today called TopBot. But I'm also going to come to you from a different area, or a different arena, if you like, because my background is not in finance at all. I'm a former police officer. With the surname Holmes, Holmes, many people laugh at that, but I was very fortunate. Most of you who know me or have followed my work know that this man here, Tom Williams, was very instrumental in teaching me what I'm about to show you today with Philip. And both Philip and I, Philip met Tom a long time before I did, Philip had an experience of the market already, and I had no experience of the market when I met Tom. I didn't even know what a chart was. So in some ways, that was a major benefit to me, because I could actually learn from someone without knowing anything and having any preconceived ideas. Now, let me bring Philip in to start with here. And Philip, there's a lot of traders here that are completely new. They're just starting to trade. We've got a few students in from one of the London universities that I'm going to speak at. Philip, just from your perspective, before you met Tom, did you think trading was fairly simple and straightforward, or did you struggle?
No, I struggled. I tried all the different methods. I tried fundamentals, I tried technical analysis, Elliott wave, GAN, all the different things. But I definitely struggled because I always felt I was one or possibly even two steps behind the markets. You've got to remember the markets always anticipate everything. So you've got to be that one step ahead. Now, what I was missing was what was actually happening in the markets. I was reacting to what already happened in the markets, which is no good. So by using VSA, I was able to look at supply and demand that's going on in the markets. And when you combine support and resistance with VSA itself, it gives you a very powerful tool, which is looking at what's happening live in the markets, not what's happened a day or two before. Technical analysis is fine up to a point, and I wouldn't, I'm not going to knock anybody who uses technical analysis and makes money out of it. That's fine. But I do feel that when you're getting close to tops and bottoms, technical analysis is not particularly useful at those points, and they can be very critical points in the markets. So for me, VSA combined with support and resistance gave me that extra edge, which helped to improve my performance.
Yeah, and I think that's the key. It's giving you the edge. So what we're going to show you today, and there's quite a lot of questions coming in about, and I understand this, the differences between the Smart Center Pro software and the strategy software. And I'll try and clear that up for you today, because there's a price difference and there's a way of using them which is different. And I'm going to try and clear that up so that in this webinar, everyone understands exactly what the differences are. Because one of the things about trading and investing in the financial markets is you've got a whole way of trading. You can trade on a 1 minute chart. You can trade off a 1 hour chart. You can trade off a daily chart. You can trade off a weekly chart, and you can even trade off a monthly chart and see things going on. You can also trade thousands of different instruments, stocks, futures, forex, commodities, you name it. And one of the things about our business model is that the way that our charting software works is it finds the trade setups based on what we call climactic volume, and then gives the trigger when the market is ready to turn. Now, in the TopBot strategy, well, as I said that police siren that you hear in the background, because I'm a former policeman, is an alert that comes through to our email service here. So let's just click on this, and this comes directly from the software. And so we can see it tells me in futures, I'm using what we call Sierra chart, and in the Forex market, I'm using MT5. And if we left click on there, it tells us what the indicator is. It's got a number, and I'll explain all this in a minute for those of you that are new. And here on the 6C, which is the Canadian dollar, it tells you that we've got an alert. It tells us that it's the end of a rising market on the 15-minute chart of the 6C. Okay, now that's -5. It's a strong indicator, and it's one that could turn price. One of the things I will do is we'll certainly look at that and see if there's a setup there. But there's a few things that are quite interesting at the moment that are going on in some of the major indexes and in the commodities. Now, in the Canadian dollar, we've had the alert. So what I'm going to do just very quickly, and I'll talk to Philip about this in a second, and he'll explain to you the importance of this indicator. But you don't ever go short immediately you see it. You have to wait, and patience is key. So over here, the market's come up on very high volume. It's closed on the low. Now, can anyone tell me, if you're a customer of ours, why I wouldn't take the short right there now? Can anyone tell me Why wouldn't, even though I've seen a very strong indicator in our software, why would I not go short right at this moment? And Lack, I just saw your question, and I'll come to that. In fact, yeah, exactly. Hello, Dan. Good to see you. Yeah. Lack, I saw your question come in there. The best thing you can do is email me personally, and I can show you, because I don't want to do it all here now because we're not going to have time. But my email address, if you're interested, just drop me an email, put your Skype details in, is Gavin H. I'll type it in here at TradeGuider.com. I'm around for the next day, and then I won't be available. But if you just go to here, I'll just type it in. It's Gavin H at TradeGuider.com. There you go, Lack. And just drop me an email, put your Skype details in, tell me what time zone you're on, etc., and then I'll happily connect with you. So what we've seen here in the Canadian dollar is an indicator. Now this indicator works much, much better when the spread is slightly narrower than this, but it's definitely, look at the volume. That's what the software is picking up. Now, Philip, in your book, you've talked about the importance, obviously, of climactic, or what we call ultra high volume. This is a very, very high volume bar, the highest actually of the, well, for the last 2 days from what I can see. It's produced a signal, and I know that you wrote the dialog boxes, and obviously you've said here, this is only valid if you have already seen a substantial up move taken place. It's a 15-minute chart, so we've had about probably 7 or 8 hours of upward movement, and it looks like we may get a reaction to it. But do you just want to, the question I've been getting on the emails a lot is, why is ultra high volume, when it appears on the chart like a footprint, so important to identify and start to analyze? What's your view of that?
Well, can I just go back 2 bars before that and just explain what's actually happening there? If you go back 2 bars before that signal came in, you've got a very widespread up bar which closes just off the highs of the bar with an increase in volume. And that's effort from the volume. The volume is actually effort there to push the price up higher. Now, there must be a bit of selling at the top of that bar for it to close off the high of the bar. But then when we look at the next bar, that's the bar before the end of rising market signal, the volume on that bar is higher, but it's pushed up, and notice how the range on that bar is actually narrower. Now that gives you your first clue, because the fact that the range is narrower tells you that there's more sellers present on that bar than there were compared to the previous bar. Because if there's nearly all buyers in that bar, it would have been similar to the previous bar. The fact that the top of the bar is being capped, if you like, and stopped from going up, proves that there are sellers. And part of the reason for that is because you've got an old tops just immediately to your left a few bars earlier, but more importantly, over in the background, which Gavin's highlighting. And you'll notice that on that bar Gavin just highlighted, there's very high volume on an up bar. So there's a lot of supply on there. And Gavin, I think you can draw a line across there. That's the one, exactly there. And then when you get the end of rising market indicator, what you're seeing there is an attempt to try and push up through that area to the left where Gavin has marked with the 2 horizontal lines, green lines there. It's trying to push up there, but it's getting hit with massive selling orders. Now, we don't know yet whether the market will manage to push up through there. It'll take a tremendous effort for it to do it, or whether the selling will prove too great and the market will fall off. And this is why you must always wait for the reaction to see whether we can take out certainly the low of that end of rising market indicator and close below it. At the moment, we haven't done that. So what it's telling me is there's definitely a lot of supply there, but we're still not, the market hasn't told us yet whether the buyers have now collapsed or whether there will be sufficient buying to push up higher. If it did manage to push higher, it would need to be tested anyway. So that's the reason. It
is. And Philip, I've been doing quite a few mentorship programs. I'm going to stop. I'm not going to be doing them anymore, but I've been doing them with individuals and also with small group sessions as well. And what I find fascinating now is a lot of the traders that I've taught have been sending me some charts. And when the trade has gone wrong for them, they just got in far too early. They don't follow any rules. even though we have a rules-based strategy document, which has taken a lot, well, it's years of work, I still find that when someone's sitting there looking at an end of a rising market, and I think Winston, one of our long-standing customers, well, the market's still going up. Well, it is still going up. It's a 15-minute chart, and it could go up again, which is why we have a specific trending system that in the rules-based document says we have to what we call change behavior before we go short, if we're going to go short. And if you're going to go long, keep in mind, you're in this area up here, and it could go up a little bit and then immediately reverse on you. So one of the things that the software does, which is the very powerful part of it, is it identifies the trend in multiple time frames. Now, one of the questions came in about the Smart Center software. So if I pull it up here, you'll see here a piece of software that identifies trend. And one of the things you're going to notice about, and this is the Smart Center Pro, this is our top version that we sell to the institution, but it tells me very clearly that today, on a Tuesday, there's a lot of congestion in the market, and it's trying to find its direction. And how do I know that? If I ask you all a question, looking at the schematic here, what's the predominant color on this schematic? Is it red, green, or gray? What do you think? Okay, well, I can tell you that if I counted the red boxes, let's just do it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. If I counted the green boxes, I can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 21, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31. Now, if I count the grey boxes, for those of you that didn't get it, 1, 2, 3, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 20. You get the point. I don't want to count them all. There's over probably 100. Now, that's the software saying the market's gone into congestion. Now, we can see at the moment, on the end of a rising market signal, we've broken the low of the bar. Can anyone tell me the indicator that would force me to take the trade? And I mean, I would take it. Not now, might take an hour, might take 20 minutes, don't know. What would be the indicator that I would see at this lower level? If the price breaks and goes back up to that level, what is the indicator that we would trade? Annette says, do we have to check timeframes here? You don't need to check anything. This here, this Smart Center Pro system, or even the TopBot system, shows you quite categorically which ones are tradable and which ones are not. What you're looking for, the ideal setup. Now, remember this. I read to you at the beginning a risk disclaimer. There are some days, not every day, some days where the market is choppy and will cost you your account. Potentially, if you're a bad trader. There are some days where, like I was trading gold last week, I did an event with the Wealth Summit, and gold was lined up completely for shorts, which it still is actually. There's still quite some opportunity in gold, although today, what we can see, the weekly here, if I put the scanner up, you can very clearly see what's happened. So the weekly is very negative, which it has been for about 8 weeks. Every box in the software represents a time frame. This is weekly. What do you all notice about the daily time frame in gold? Just type in what you see. What do you notice from here about the daily time frame here in gold for the last, 3 weeks? Okay. What do you notice here in the gold chart, right? And we're talking about a daily chart in gold using the spot Forex or the spot market, it's still falling. So this is what we call a swing trade situation. And actually several times it's given me entries on the smaller time frames to get in. It made a low of 12.14. And in the futures market, very, very similar. If we look at gold in futures, remember that's spot, here we can see that we've got this weakness that appeared. The market went down. We made the low at 12.10, right the way down here in futures. And in spot, it went slightly lower. But now the market is trying to have a corrective move into this area of high volume, which means it will give another setup in the next 3 days for certain. Will I go short against these two bars? No. I'm already positioned short at a higher level, but this bar here is what we call a gotcha bar. And if you look at the highest volume bar on the chart after this one, it's right here. And again here, this is a question that many people ask me, is when you see supply entering the market on a daily chart or a 4-hour chart as this is, why does it take so long for the market to start to collapse? Philip, what's your view of that? Because it does. It took for that trade to set up. Really, it set up in here and then continued to fall. So this, for me, was one of my key entry points because it was very, very weak. And then it's almost like a false rally. It's going up, and look at the volume. There's hardly any volume in it. There was a few shorts to be had over here. Now it's popping up again, possibly on low volume. And a lot of people struggle with the concept, I know, that when a market's going up, there must be more buyers than sellers in their minds because they see that high volume. And if you look at Bloomberg and you look at CNN and you look at BBC, when the price of anything starts to go up and the volume is very, very high, they will report there must be today more buyers. But of course, that's not true. Very often it's not true. Can you sort of elaborate on that?
Well, in a bull market, it takes effort for the market to push up. The term is it climbs a wall of worry. Now, for a bull market to commence, you've got to have accumulation take place first. And the purpose of the accumulation is to remove all the floating supply or the potential sellers at the beginning so the market can then push up. Yes, there will be a bit of selling coming as you push up various levels. But once you've removed that main floating supply, you're then primed for a bull market. Now, in a bear market, the distribution's already taken place before the market really gets underway and actually starts falling. And quite often the market can just fall under its own steam. But what you will often see, and this is where I think people get very confused with bear markets, is often a bear market will spend more days or more minutes or hours or whatever your chart you're looking at going up than it will going down. And a lot of the up bars will just be narrow spreads, low volume up bars, and then you'll get a wide-ranging down bar with quite increased volume, which will push down really sharply. And it can undo probably 10 bars of going up just in one bar. And that's how a bear market works. And it traps you into a poor position. So you're tempted to think the market's recovering. You might take a short-term long position, and then you get a big dive down in one bar, and it just simply takes you out. And that's how the markets function.
They have to function that way. They have to have more losers than winners. Interesting, the Nasdaq just came up with an alert here as well. So we're just going to have a quick look at that. Now, you heard there's two things that happen when you've got the software, and whether you've got Smart Center Pro or just one of the strategies. I've got 4 computers here that I'm using with different strategies on each computer. So I can scalp trade, I can swing trade, I can position trade, and I can invest in stocks. So I'm using all of them for different reasons. But some people, I've spoken to said, well, I only really want to be looking, Gavin, at a 1, 2, 3, 4, 5 minute time frame because I want to be in and out the market fairly quickly. Well, then we have something called Super Scalper that does exactly that. All of those strategies that you see on the website are based on the VSA principles, all of them. So there's not an exception. So when we talk about identifying these indicators and knowing when to take the trade, all of the strategies will look for the ultra high volume bar, the change in behavior, and then alert you to when the time to trade is there. That's what they all do. The Smart Center Pro version has a lot more functionality. Now, there is an 80-page document that goes with it, which means that you can be trading in front of your screen and you can trade you can scan, I should say, not trade. You can scan hundreds, even potentially thousands of charts. But I mean, the limitation is 25 for each version of Smart Center Pro in the chart books. But I've actually got multiple instances running on this computer here. So I've actually got, as you can see, this is TopBot that I'm running on this computer. So what it's identifying these very, very high volume bars and telling me, okay, there's supply present, there's supply coming in, be ready to look for a trade. We don't want to be going long where there's too much supply. We want to see what we call the change in behavior. Now, how you can get a copy of the documents and the rules is really straightforward, and there's absolutely no restriction. We don't even require your email address. If you go here to www.TradeGuider.com and you click on products and services and you click on the software tab and you say, right, I want a strategy for my particular style of trading. You click on that button and it takes you through to the sharpshooter, and you can basically click on these documents. But one of the things we did just recently do the last 3 days, some of you will have seen it, some of you won't, is we decided to do a survey of every single customer that's just gone into our prospect database. So that survey allows us to find out exactly what's right for you as an individual, rather than just giving you this smorgasbord of different strategies. Because the best people to advise you on VSA is the team that we have here at TradeGuider. That includes myself. I get involved with it. And what happens is the survey asks you about 10 questions, maybe 12 questions, I think it is. And once that's put into place, we know enough about you, we call it a fact find, to be able to recommend exactly what's right for you, for your budget, for what you're trying to achieve, all of those things. I will ask my business partner, Richard, to post the link in here for that survey. And if you fill it out, it takes about 2 minutes. Then one of the team will connect with you. Now, that could be in Australia, it'll be Danny. In America, it'll be Matt. If it's the European area, it's probably going to be myself or one of the team here, because we do like to make sure that we learn about you to find out what your problems are. And do you know something? That's the interesting part about trading, is some of the things that people are doing, they're self-sabotaging themselves in their trading. And that's what I found from these surveys. Philip, I know when you started, before you met Tom, you really were having trouble with the whole market, but you had to relearn a lot of things, right?
Yes, I did. And that's one of the tricky things. You've got to remember, when you're investing or trading, it's a constant psychological battle that the market focuses on. What they're trying to do is to try and wrong-foot you the whole time. That's how the market works. And that's why, if you don't understand the markets properly, you're constantly losing money. You'd actually be better probably just tossing a coin, and at least then you'd be right 50% of the time. But I was finding I was right very well, probably about 25% of the time, and wrong 75%, which is why I thought, well, if I tossed a coin, at least I'd be doing better. But fortunately, I met Tom, and at the beginning I struggled, and I was struggling because of all of those negative things I'd learned before. I actually had to unlearn those things before I could really learn and fully understand how VSA worked, and that took some time, and that's one of the biggest problems. And I think actually if you've got some university students in here today, I'm hoping that perhaps some of them haven't got a lot of those bad habits, and probably ideal people to learn VSA, because they're learning from a point of view of not being saddled, if you like, with all the negative things that can cause you problems in the markets.
Yeah, and we have, and in fact, there's some talk actually of training up some of the students in VSA for the fund, and that which makes total sense. So let me just go and answer a few questions about what's happening here. So first of all, we'll go back to the 6C contract here. We'll go to the let's see, the time frame here is the 15-minute. So something's happened. So we've had the alert, we've had the end of a rising market. Okay, the market has now fallen, which it would do. That's not surprising. You've got a 2-bar indicator. Now it's going back up to the trigger number that we drew. Let's watch the volume. And now, at a 15-minute time frame, it may still continue to rally, but then we go down time frames, and here's how you do it. You've got all these different time frames. If I look at the weekly chart, I can see we're in a clear downtrend. It's quite obvious. If I look at the daily chart, we're in a clear downtrend, and right behind us is a trap. Right behind us right now on the daily. The 4-hour chart, it's been really whipping, and then suddenly over here, we've gone up into this area where we're currently heading, and there's no demand. This is why it fell for about nearly 9 hours. Once you recognize this, you'll see it. 60-minute chart, we've got the same thing. Look at this bar here. Now that's supply coming in. It's knocked the market down. It's going back up into that area where there's supply. But we notice that here, the market is actually going up over the last few hours. So this has not rolled yet. One of the things I do is now jump to smaller time frames to see if I can get in a bit early. Okay, and that's more risky than waiting for the market to move to the 50% line here, take that out, and then move down. If you're a conservative trader, and many of you are, then one of the things you can do is say, look, that 50% level right here, that's a 50% level of this massive volume bar. The market went down through it, pushed up again. If it goes down and breaks the support level where it found support and goes through it, then you can start getting short. Now, if you want to be more aggressive and say, you know something, I want to prove to myself that that's weakness, and I want to try and take a trade to the downside, because they're very likely going to test this low, then you go to the smaller time frames. 15-minute chart gave us the end of a rising market and a reversal, and we've rejected, at the moment, this trigger. Now, a trigger number is programmed into the Smart Center Pro technology. In TopBot and the others, you don't get these trigger numbers. Now, I've physically drawn these on to show you, but the software, and it's very clever because Grigory Margolin, our head of technology for VSA, programmed in these levels so that the software projects them automatically. And so if you're trading intraday and you're trading live, you're not worried about the email alerts. You're just saying, I want smart technology to tell me when to get into the trade. It'll come up and give you that police siren, and it will also give you the actual trigger numbers and the levels that you should be looking at. And those are pre-programmed in. They're easy. You don't have to do anything. You just have to read the manual. The amazing part is how many people spend money and don't even read a manual. But I have to admit, when I used to be on flight simulators, I used to love like Microsoft flight simulators and stuff like that. I never read the manual. I don't know why. Stupid. Because I would keep crashing the plane and I'd have to learn. Whereas if I just read the instructions, I'd probably be landing safely on the aircraft carrier all the time. But no, that's my personality. I wanted to get straight in, and because it was a simulator, it didn't matter. But when you're trading with real money, read the manual. Because it took a lot of time to put together. And the instruction document is very, very specific. And it tells you exactly how to set it up. Now, everyone has different levels of competence when it comes to computers. I know that. Especially when we've got all these newfangled things coming out. But with this, most of the software that we are providing has preset conditions in it. And it's easy to set up in that respect. Now, is it sometimes easy to understand in the first few weeks? Not always, because you are dealing with things that you probably haven't heard of, like why is there weakness on up bars like this? And then the market falls, because you'll probably have been taught. If the market's going up and the volume increases, there's buyers here. Has to be buyers, because the market went up. But that's absolutely, I can prove that's complete rubbish. Philip can prove it. I can prove it. It takes your brain. There's a brilliant book that one of our customers just recommended to me a few months ago, which I've just read. It's called The Biology of Belief by Dr. Bruce Lipton. Has anyone heard of that book, by the way? Biology of Belief by Dr. Bruce Lipton. It's a very in-depth book, I can assure you. But my goodness, it's a really interesting read when you understand it. It's not related to trading, by the way. So if you're a trading freak and you don't want to read all about the belief systems we have, then you probably don't want to read the book. But it's a very good book. So let me just go to a few questions here before I move to the next chart. Okay. In a widespread up bar, says Adrian, high volume, which comes first? The increase in price on the buying? Does the increase in price cause the buying? Or does the buying cause the increase in price? Right, so there's a good question there, and I think Philip's the person to answer that one as well. So when a price goes up like that, what Adrian's asking, what causes the price to go up? Is it buying from professionals when they suddenly buy a bit to push the price up and then sell the whole lot back as the buyers come in at a certain price level? Philip?
Well, it's the buying that pushes the prices up. So it's the volume. If you look, you've got volume and price. And we talk about a law in VSA called effort versus result. Now, the effort is the amount of volume that comes into the market. The result is what happens on that volume. Now, if the market pushes up and pushes up strongly on that increase in volume, you know that most of the volume must be buying because it just continually keeps on going up. On the other hand, if price doesn't go up very far on a big increase in volume, that tells you that price is being marked up with the buyers. But as it's being marked up with the buyers, sellers are coming in and pushing the price back down or stopping the price from rising. So that's the key to understanding the balance between buying and selling, or supply and demand, that's taking place on the bars. And don't forget, you must also look at the background of the chart. Don't just try and read individual bars. You have to fit it in with the background of the chart, and also, most important, levels of support and resistance.
Yeah, absolutely. Razwan, yeah, nice to see you. Haven't seen you in here for a while. Your question was on, well, first one I can see, and there's a few. On Forex, what is the longest time frame that you use? The weekly chart. I don't use monthly. So I use the weekly, the daily. My main time frame for trading Forex is the 4-hour chart. But the golden rule is, if you're going to swing trade with Forex, you have to accept that sometimes the market's going to go up and down. But if you hold a position for a period of time, let me show you actually, I'll show you this in, probably easier to show you in this Canadian futures trade, because I trade futures and I trade spot. They both do the same thing. Okay, but one of the things we talked about at the beginning when we got this trade alert on this signal, okay, which of course we can see the market's falling, but it's going up at the moment. But look at the volume. Now, one of the things I love to show in a live event, when there's no preconceived PowerPoints where I could say, well, that happened last week and this is what I did and all of that rubbish, because no one's interested in that, because they say, well, of course you've cherry picked that one, is to show you it live, much more convincing and proving that this system will actually work. Now, at this moment in time, we've gone up, the volume is low, we've closed below the trigger bar, but there's still no trade at the moment, but it's setting up. So if we go to the 5-minute chart, we can see that they're testing this level, but everything's still green at the moment. The 4-minute chart, we can see the same thing. There's a lot of volume here. It's struggling to go up. The spreads are narrowing. The 3-minute chart is looking very interesting because we've gone up here. Look at the volume, narrow spread, knocking it sideways. The 2-minute chart, again, it's starting to roll over, but the 1-minute chart is a key for me now because it is already rolling. It's turning. Notice that the distribution level up here is starting to roll price. Okay, so now, for me as a scalper, from a scalp position trade, I'll be ready to get in as this starts to turn red. Okay, and I've already got an order positioned ready for when that happens, because if it breaks that low, just there, and it might not do it. And if it doesn't do it, I wouldn't trade it. But if it did, and it starts to break into this area, this is proven. This 3-bar setup on the 1-minute chart is proven. And look at the volume on each bar. Now, if that's all buying volume, okay, we wouldn't expect the prices to close near the lows, but I've already had an email alert on the indicator on the 15-minute chart. So what you do is, the bigger the time frame the indicator email alert appears on, you then pay attention to the smaller time frames, because logically If that's going to be proven to be a trade, right, because they do mark things up, as you can see, if it's proven to be an entry, you will start to see the breakdown in price. Keep in mind, and this is important, because you've seen it happen here, and this 1 minute chart has still turned grey and green, you've got to be patient, because it may break down in 10 hours. It may break down in 30 minutes. It may break down in 2 minutes, or it may not break down at all, and the market will continue to try and be pushed up. This is why it's so important with our strategy to look at the software and say, right, has this starting to roll? And these are the time frames it does it. So you've got one place to view everything for all the instruments that you're looking at. One place. So I can go to chart 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 and try and see which ones are trending together. I don't need to. I've got one piece of kit that does the whole thing. And I can just sit there, and I do. I've got it on this other screen here. I've got that on the large screen, and I'm just watching and waiting. And when a VSA principle appears that's of interest to trade, we haven't had very many today at all. If it was red, I would automatically just click in the box and it would tell me, find me signs of weakness. Today, here on a Tuesday, because we had such a decent move yesterday, the market's taking a breather. Probably not the best time to be doing a webinar, but nevertheless, I don't care, because I trade what I see. If there's no trades, it's just as important to me to say there's nothing and sit there and not lose money than say, oh, I've got to go and find a trade. I know there's been trades that happened at the end of last week, and for a swing trading perspective, they could really move. But the key to this is looking at a very simple, it's almost like a dashboard. That's what I call this. That's what Grigory really invented, was a very simple dashboard that can basically look for all the key principles, all the key levels, and most importantly, when the trend alignment happens. And when there are days when you open the dashboard and it goes, it's all grey, it's a bit boring, then don't trade it, because you may have to have days where you cannot trade, and professional money have days when they cannot trade as well. It happens. So let me just go through some more of these questions, and then I'm going to ask Philip to do an analysis. Philip, if you could put the daily chart of gold on, I'm sure your trigger numbers are going to be identical to mine, but if you could do that for us, Philip, in a minute, because I know there's a lot of interest in that.
I've already got it up.
I'm sure you have. So we'll hand it over in a minute. Let's just have a look at some of these questions. So Razvan says, with Smart Center Pro, will we receive only one document? Oh, no, Razvan, no. You'll receive a instructional document that's been produced a few months ago now. I know you've already emailed me, I believe, about some additional licenses. Just email me today or tomorrow, whenever you're free. I've got the document. I'll email you the full 80-page document. And then obviously you mentioned that you might want some additional licenses. We can definitely do that for you. We do have, just so you know, an upgrade that's going to come out. Not sure when, it's not immediate, for the technology that we've currently got. And we're working on it, or Grigory's working on that, but there's no time set yet. I haven't been given an instruction from the team that's going to be ready in X amount of time. So we're still working on it. But keep an eye out for that, because it's going to have something in it called trend clusters, which are very, very well. We talk about support and resistance. Philip, you might want to just touch on that, because the trend clusters that were in TradeGuider, the original version, to me were incredibly powerful. The market just bounces off them when they appear. I'm not sure if you used them, but I certainly did, and still do in the main version. What's your thoughts on that?
I did, and I actually did put a small section in my book about that too.
Yes, you have.
I haven't used them for a while, but I did put something in about them.
Well, once we release this new version, we'll do a seminar specifically on that. Okay, Tony, hello. How many signals on average would one see in a week with TopBot watching the Forex market just during the London fix? What an excellent question. I actually know the answer to that, because I've actually had to record it for the fund. So if you were just trading on TopBot and nothing else, and you were just looking for end of a rising market signals or bag holding or climactic signals, The main indications happen at the fix, not before. So basically, the trade setups seem to happen between, well, 3:45 p.m. and about 4:45 p.m. because the market's been marked up in a direction or marked down in a direction. What I often find, however, is that most of the indications in TopBot come at the beginning of the London session. And it was a customer who proved that to me. So we've counted, and I'm talking just about these 5 pairs. I'm not talking about any more, so let me just be clear. It's the British pound versus the US dollar. It's the euro. If you want to write these down, please feel free to do so. So it's the British pound versus the USD. Okay, it's the euro versus the USD. It's the Swiss franc against the British pound. Okay, so that's an unusual one because it's a minor, but it definitely moves. It's the Aussie dollar versus the GBP. And then if you look at the other ones that still fall into the category that you would want to watch, the Japanese yen versus the USD, and the Japanese yen versus the British pound, and the Japanese, and again, if you want to add a few more to this, the Japanese yen versus the euro. Those are very prolific, and they produce the most alerts. Now, the number. So let's have a quick look today. So I'll just show you in Spot Forex the number of alerts that we've had. So I'll go to my GMX account. I'll just update it. This comes through to my smartphone as well, yeah. So I'll just go through, since I started trading, which was about midday today because I was out with the kids because they're off school. But if we go down here, I'll just give you an idea. Some of these are futures alerts, by the way, just so you know. They're not all Forex, but most of them are Forex. So when I switch the computer on yeah, there we go. So it's from here onwards. Right, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32. About 33. The average if you take just a 3-hour session is about 42 to 48 alerts. So that's about standard. Today, Tony, you can listen to the recording. I'm going to put this on YouTube so you can go back and write it down. But there's a couple of minors and there's some majors in there as well. So basically, what you'll find is you don't, with this system anyway, you don't have to trade 8 or 9 hours a day. And I don't, just to be specific. I don't generally trade in the evenings unless the Aussie dollar and the Japanese yen are moving, because that's like 7, 8 o'clock, so I have my family time. I will get up early in the morning around 7 a.m., 6 a.m. and look at the London market when it opens, so I'm ready for that, because sometimes you get a really good trade there, and that could be the trade for the day, as it was with gold earlier on. And other times, I might look at the markets and say, well, okay, I'll wait for the fix. Now, for those of you, do you all know, by the way, because I want to make sure, do you all know what the London fix is? Do you know what the London fix is? Okay. Al, if you're in Miami, you know, we can certainly help you. Just drop me an email. I'll put my email address in there. And it depends what you're struggling with on that, because like everything, everyone's different. But I'll need to see what you've got and see what you're trading. No, just drop us an email. There is a ticketing system. Let me just be clear on this, by the way, before, because I know a lot of you just bought the software last week. If you have an issue and you need some support, there's 2 places you can get it. And the easy one for our customers is you click on the front page of our website and you click on customer support. Because we have a very, very good ticketing system that I actually monitor myself. I see it. And it's open all the time. And you just put in here what your issue is, whatever it may be. Or maybe you're just coming in and saying, hey, I had a great trade. And people do that and send me a chart. That's great. But this is the way you connect. Because we've got nearly 5,000 active customers around the world. And that's a lot. And they're growing every single week. So we have to have a support system that works for us as well. I'm sure you appreciate that. This is it. And if you're interested in buying the product, you can use this support system and say, hey, I'm really interested in talking to whoever about buying XYZ. You can use this system, even if you're not a customer. And it works. And it works because A, we record it, and B, we can track it. And it's a very, very good system to make sure that people are dealt with in a correct manner based on the time they put their ticket in and the time it took us to respond. Now, sometimes if we're very busy, it can take sometimes up to 8 hours, sometimes longer. But usually the response time is very, very efficient. And again, if it's not, then we are on, my wife, Laura, who works for the company, she's our sales support person, can be on top of it. Let me just have a look at some of these other questions. Yes, well, absolutely. Yeah, so Razwan, you're right. The banks fix the rate in the LIBOR fix. So for those of you that said I'm not sure what the fix is, at 4 p.m. UK time, the major banks fix the London LIBOR rate, and at that point, we tend to see big volume moving in as positions are closed. We might start to see it now, in fact, because it's 2 minutes to go. And you'll start to see the footprint. So if we start to look at the pound or gold, right, we should start to see volume coming in. And there's definitely some on the pound already. And in gold, actually, that's the 4-hour chart. But if we go to the 5-minute chart, look, it's just starting to move in. So there could be potentially some shorts on gold. There's a lot of volume coming in, but we just wait. The one I'm watching very closely, we've got the Aussie, which we know we saw the end of a rising market on, and of course the Canadian dollar. Now the Canadian dollar, since we had the indication of weakness on the 15-minute chart, has begun to fall. Okay, so this is the one at the moment because it's the strongest signal in our software that I would be following. So there it is. Okay, let me get rid of the trigger lines. I'm just going to remove these for the moment just to keep it simple so you can understand. Okay, so there was the email alert, the end of a rising market. Okay, there was the email alert. And just to remind you, it came into my GMX account, which I use. So as soon as it appeared at that price level, and it's now trading lower, the alert was there. Now, I wanted to ensure that some of our customers trade that and just scalp it. They just say, look, I've seen it. I know it's going to knock the price down, which it will do very often. I'm going to trade it. The price is falling. I'm going to take 5 or 6 ticks with 5 lots. That's several customers do that. No issue with that at all. Me, when I'm teaching, I say, look, wait for the market to start to change behavior. Here's the level that I have into this high volume bar. We hit it once, and now we're trying to come back down into it. We're not there yet. And I'd actually, at this sort of time, what I'd like to see happen for this to be an entry for me is this. A widespread down bar on an increase in volume, taking out this area. That's called, well, can anyone tell me what that's called? Yeah, Razwan, thank you for your comment, and thank you to Kyriakos. Nice to see you as well. James says, how would I know when the importance of ultra-high volume bars in the background should be superseded by price action in the foreground? It's a good question, Philip. I get asked that a lot. So when you've got price action in the background, we talk about ultra-high volume in the background. When do we then suddenly reverse our position and say, well, actually, that was weakness, now it's strength?
Right, well, let's assume you've got some ultra-high volume bars in the background and price is rising. If price manages to push up through the top of those ultra-high volume bars, and it will take effort to do it, so you'd expect to see an increase in volume as it pushes up. Look for it to settle above the top of those bars, then look for it to test before pushing higher. On the other hand, if you're pushing downwards towards those ultra-high volume bars, If price manages to push down through the lows of those ultra high volume bars, and again that will take effort in the form of increased volume, look for it to push down and settle below the lows of those bars, and then push up back up on no demand or low volume up thrusts, and then you'd expect it to push lower. But the ultra high volume bars don't just suddenly disappear just because price is pushed up through them or down below them. They'll still be present in the future should price return to that level.
Exactly, and that is a very important. That's an interesting one. The Nasdaq has just triggered a potential short trade, which is quite interesting. I was expecting it to go up, but it looks like they're selling it. A quick look. Right, well,
I'm just watching the London market at the moment, Gavin. I'm just looking at it's being driven up solely, really, today by the metals and mining companies.
Yeah, it's interesting. It just got a trigger. I missed it earlier, unfortunately, because it's just coming on the other computer. But it triggered here and here, reversal. So number 126, I've got programmed in as an alert in a downtrend. Now you can clearly see here what we're demonstrating. First of all, here's your ultra high volume up bar closing in the middle, and you've got a failed test almost immediately after it. So they test it and it closes lower, so the market's failing there. So they've marked it up, closed in the middle, and then over here, no demand. Absolute beautiful setup. So I'm short here now. So what's going to happen now? I missed the entry up here. That was my own fault, my stupidity, because I'm sitting looking at the other screen. But it's gone. Okay. So, and actually I've been filled on the other one as well. So let's go straight to the Nazi. Okay, and we're just going to go and chase this now. Bit of scalping, but that's definitely come from the smart technology, and it's moving down beautifully here. So what I'm going to do is I'm going to chase the price here. That was an immediate one. That just came in really quick. Okay, and I'm just going to chase this down. Just a nice little profit for the webinar. See how well we can get. Again, I don't like to, when I'm scalping, I just want to get filled. Done. That was a 30-second trade. It happened real quick. But I missed it here. That's frustrating. But not to worry, we don't get frustrated when we're trading. There'll still be other opportunities here. But let's explain it, because that's this is my live account, John. Yeah, this is the Infinity one. So basically, the alert came in right here from Smart Center Pro, actually, right on that bar. And the first alert was there, and then I've got it set for the second one. But if we look at where it's gone, I might actually get another alert here. I've got another one. Crikey, they're coming in thick and fast. So let me go to the other screen here. Just bear with me. I'm going to take another entry here. I've got to wait for the no demand bar. So it's 1 minute chart, no demand is what we're looking for. That was real quick. But if we look at the setup, let's explain that. That's more important. So first and foremost, we have this widespread, narrow spread, which is very important on an up bar, and it's confirmed in the software by no demand. This is a 1 minute time frame, Stephen. Did you take that on a 1 minute chart? Yeah, 1 minute with one lot. But then the key to it is what happened over here. It's marked up. It's in a downtrend. I could have stayed in this trade, but the point was I'm scalping. But on the other machine here, I'm definitely going to stay with this trade because I'm short again on two lots. But here, let me show you the reversal, and then that's the key to it, the supply. This proves that the market gets marked up, and it's right after the fix. And this happens quite frequently when they want to mark the price up like this at the fix just after. There's a gotcha bar. That is a gotcha bar. Yeah, absolutely. It's taken out the support. You're absolutely right, all of you that pointed that out. That's a complete gotcha bar. I got in late. Okay, I should have been in really here when the first alert came in and the first email alert came in, and then here it was a second confirmation. But nevertheless, that's the best way to teach, in my opinion, how you can scalp. Now, this could go a long way down. Now, we could get another entry. But I don't. If I've already taken profit, I'm not going to chase this. I'll wait for the market to go up and give me one of these. Okay, that's all you do. If you've taken a bit of profit, now you can sit back and you could be trading 3-4 lots. It's up to you. That was just it's a small account. It's $5,000 that we trade in the futures account. It's a small account size. And then we look for these movements to happen. But I try to get my profit as quickly as possible. And if it continues to go like it's going now, I never regret that, ever. I just say thank you so much for that trade, because sometimes it's happened. So other days I've got short and immediately it's reversed back and I've taken the profit and it went up because the signals are saying, hold on a second. No, I think this will go back up. I think, well, I don't know what you think, Philip. This may tank because it's all over my screens here. Like the Smart Center Pro software is giving me, you can hear them, multiple alerts on the S&P as well. Philip, what's your view of this? That's confirmation, isn't it? Weakness, no demand.
Yes, what you've got, what set this up was actually if you look over to the left of the chart, I'm just coming back to the question that James raised about the ultra-high volume bars in the background. You've got your ultra-high volume bars in the background. The market tried to push up through the top of that area to the left of the chart, that first area of highs. It just managed to push through but couldn't hold it, and we saw further weakness, and then it came off. So you've got a double top there. And there's high volume on both occasions. So that's all the supply coming in as the market's marked up.
Just there.
That's it. Yeah.
I bet you'd have had the same mark. Right. So before we wrap up, I know some of you have asked about Philip's analysis on gold, and I think I'm probably going to be looking at this chart as well. Let's just keep an eye on this 6C. Oh, it's gone. Okay, so I'm in another trade. Bear with me. I got filled. I thought I was, but for a quick look, and we'll put up the 6C. Okay, so again, one lot trade. First of all, golden rule. We'll put the stop now here because it's a slower mover, but we'll move to break even, and we'll just let this fall. So same idea. So what we've got is, and I'll just so before. Sorry, because I wanted to keep this to an hour, but it's not going to happen. It never does when the market's moving like this. So we got some movement at the fix. The fix is the place to make your money, by the way, guys and girls. This is where the movement happens. So what we've got is we've got the email alert that came in that we saw from the technology. There's lots of them come in. It was the end of a rising market. I won't highlight that. You saw it. The signal came in on the 15-minute time frame. There it is. And this is the importance, by the way, of these indicators when they appear. When they appear, they're very high, what I would call high probability. There's no, I mean, I just call them high probability because that's what they are. So again, on the small account here, I got filled on the other account as well. But here we can see that we've currently got a stop at break even, the end of a rising market, and on the 1 minute chart, it's rolled, which is the one that filled me. And it filled me right at the trigger number. So here again, if you're trading a big size account, you could trade 10 lots here, 5 lots. Just don't want to get too much on the radar. But the purposes of the demonstration is to show you, A, the software gives you the alert, which it definitely does. B, then you take the trade. The software doesn't automatically do that for you. You have to physically press the button. And C, then you just follow the diamond trending system. And I'm using Smart Center Pro here, but you could also do this with TopBot because it would have picked out that indicator. In fact, on the other screen here, it was the TopBot strategy that gave me the email. But I've got it programmed into Smart Center Pro as well. Remember, in Smart Center Pro, you can program in the indicators that you want to see. So, is there a London fix every day, says Dean? Yes. Every single working day, apart from Saturday and Sunday and bank holidays, there is absolutely a fix. Okay, good. Thank you, James. Yeah, Winston, I'm going to put it on YouTube. Absolutely. We'll post this on YouTube so you can hear it and go back and look at some of these pairs. Now, when you're in a situation that I'm in here, I've made the scalp trade on the left, okay? And now I'm in a trade at the moment, which could develop into a swing trade, a little bit like that's happened in the spot market that I'm in as well. You don't have to take, it depends on your comfort zone and your account size as to whether, you know, for me, on a small account like this, if it's $5,000 and I made, you know, today I've probably made $300 on the account on this one, it's small trades. Now, one of the things you can do as well is when the market's moving down like this, you can leave that stop at break even. If you get stopped out, in fact, I'm just going to do one thing here. I'm going to put it to 2 ticks down. So I've got something there. I've paid my commissions, but we can leave that running. Okay. We don't have to take the profit immediately. Now, sometimes People are very tempted to take that 50 and add it to that and go, that's great, I've got X amount. You can do that. But if this breaks down further and starts to move lower, then of course that could turn into a much bigger trade. This one was very quick, and it happened because the email alert was instant. On the 1 minute time frame, the 5 minute and the 15, we saw quite clearly the weakness was there on every time frame, and it was just a question of timing. And in this instance, the timing was just, well, for me, a bit late, to be honest, because I'm talking to you and teaching. But from a trading perspective, it's still a profitable trade. And I always say to people that I'm teaching, you never go bust making profit in the market. You can't. The difficult part is, allowing those losing trades, if they happen, to run against you. I never do. And I've taught that by Tom and Philip. You're the same. If you've got a loser, you cut it really quickly. Tom was telling me you don't like to have a loss against you.
No, I've been fairly fortunate in that respect, because there's a terrible temptation when you see something go to a loss to try and hold on to it in the hope that it will recover and turn into profit. But in trading, you don't live on hope. You live on what you see on the chart. And if something starts going wrong, get rid of it quickly. You can get back in again. If you see the principles, just get back in again. But don't let big losses happen, because big losses can do a lot of damage to your account, and they can also do a lot of damage to your confidence.
Correct. Yeah. Let's look at some questions then. Johan, hello. Looking forward to the barbecue in August. I don't know what date we're going to arrange it, but I know Laura's been in touch with you, so looking forward to coming down and seeing you. Question: on which time frame did the initial warning come in on the NQ short? It was actually, I can show you actually. So it came in. Let me just let that run. It was the 1 minute chart. So it was here. That was the initial one. Okay, which is and I've got that specifically programmed in, by the way, because I look for reversals. So that was the initial alert. And then obviously if you were to go to the chart, you'll have noticed the narrow spread, the narrowing of the spread on the volume here, and the change in behavior. And that's quite a substantial move on that. In gold, just go to the gold chart. Yeah, that's starting to roll as well. We're getting a bit of volume coming in on the gold chart. But no, the Canadian was a clear one. The clear winner of the day, because on the 15-minute chart, if you just learn this and just look for these, and the software does it for you, it scans all hundreds of charts. That's that's live. I don't know how else to teach people. that was it. That you see, it's a 15-minute time frame. Notice the market here is still green because it takes 15 minutes for each bar to fill. But if I look at the 1 minute chart, which is what I jumped to, I could see everything rolling, as you can see here. Here's your confirmation. Okay, it's a slow mover, which the Canadian is. It's at this time of night. It's very slow. And in fact, what I'm going to do is I'm going to move that down even further now, and just lock in some profit, because it's a slow mover. But it may develop into a very big trade. But quite frankly, again, as I've always taught, anyone that's been in any of my mentorship courses will know, for me, stress-free trading is what we're doing here, which is identifying climactic action, looking for the confirmation indicator, and taking the trade in a live account, which is what I did at the Wealth Summit. People sometimes they go, oh, well, hold on a second, I can't do that. Anyone can do this. I'm not that smart. Anyone can do this, but you've just got to be disciplined to wait for the change in behavior. That's all you've got to do. Wait for the discipline to change behavior. And again, once you've got that alert, don't be greedy and say, oh, I found the top. Wait for the small time frames to roll like a mushroom. And if you've read my book, and hopefully you have, you'll understand what I'm talking about here, what I'm talking about there, which is all programmed into Smart Center Pro, and what's going on here. And it's all in the software. Those alerts are all there. All you've got to do is say, yeah, I'm serious about making money in these markets. I need something that's going to give me the trigger. Recognize, if the advice I've given most people that I've talked to who are new last week, and there's been a lot of new people into the database, I said, it's up to you how you learn. But if it was me, And I did this. And I think Philip, I hope, will agree with this. The first thing I did was read Tom's book because I knew nothing about the markets. So the first thing I did was read his book and said, well, look, does that make any sense to me? And because it didn't. So then I thought, well, I can't learn from the book because there's a lot of questions there. But then he had, for me, luckily, I could sit next to him, and we didn't have YouTube videos and all of that type of thing at the time. Now everything's on YouTube. So the next thing I recommend is, after the book, if you're thinking about this, go to YouTube and watch 1 or 2 videos. There's a couple of good ones where we trade live from the Gibraltar Stock Exchange with the real account. We're in the exchange building with one of our customers, Nick, and go and have a look at that. And if you're still not convinced and you say, well, I'm not sure this is going to work for me, then request a demo by filling out our survey. Now, I'm going to hand over to Philip. I'm going to put the link to the survey up because we've already got nearly 180 people registered. So obviously it's going to take a bit of time to get back to everyone, but we will, because we've brought on more people into the team. But Philip, gold. Okay, so I've got an area where I think this is going to, but I'm not going to tell you. And I'm going to see, because we genuinely haven't spoken before today, right, for a few weeks, correct? We're not.
No, we haven't, no, because I've been busy working on other projects, and I have to be truthful, I've barely looked at the markets, and I haven't put any lines on my charts for at least a couple of months.
Yeah, so you're now a plumber, are you?
I am, yes.
You've got out the markets. You decided to start a plumbing business in Yorkshire. No, I'm joking. So, Philip, let's just see.
You'll be intrigued, actually, the project I've been working on, because you don't know about this.
I can't.
But, I won't tell you publicly in the webinar, but I will tell you afterwards.
Yeah, we'll talk afterwards, because I want to talk to you about the meeting I had this morning with Jib Stock Exchange. So, Philip, I'll hand the chart over to you. Let's take a long-term view of gold. I do think there's opportunity here. Well, I know there is, because I've had one of my best months trading this in July. Let's see what you've got to say. And in the meantime, I'll get the link for the survey and I'll put it up in the room.
Okay, well, I've got the daily chart up at the moment, but I'm going to put the weekly chart up to start with. But just quickly before we do that, you did mention, Gavin, about the trend clusters. So let me just put those up. They are available from the trends section of the software here, trend clusters. I must admit, I haven't used these much in webinars for a long while, but if I put, in fact, there's rather too many there, so let's go, we can adjust them. We can have different sensitivities, so you don't get too many. So I'll go for the standard. Standard up, there we are. Now that's interesting, isn't it? Because this is the daily chart of gold, and whereas gold just bottomed right on this trend cluster at the moment. Now, I didn't know Gavin was going to ask me to look at gold today, even less that he was going to mention trend clusters. But there we are. That's just how things happen. Now, the trend clusters are formed by looking at past trend lines. And what we're looking at is where one or more of two or more of those trend lines come into close proximity with each other. So the computer's very clever here. It can actually look at this, and it can look at where these different lines in the past are forming. Now, if we look recently, we had a block in here. Now, once you're either side of these blocks, you ignore them. They're only relevant where these blue areas come. And you can see here, price has been falling, pushed up, and that acted as resistance. Now, they're not always going to act as support and resistance. They can be broken. It takes effort to do so, like any support resistance. But nevertheless, they can be useful. And this area down here, around about the sort of 1225 area, we're seeing there's a bit of support. But let me go to the weekly chart first, because I don't want to start analysing the daily chart and then go to the weekly, because that's not the way it should be done. Always start the last time frame. So let's go to the weekly. There we are. Now, if I put up, just bear with me 1 second, so I just want to get rid of this, go to webinar, just knock that down a bit. That's better. So if I put 350 bars up, so it's about 7 years of data, and actually a bit more than that, probably 400, need to go 8 years. This is why the gold price has been falling for such a long while. It's this area here. We see this massive distribution up here. We've got this huge amount of volume. Remember, this is a weekly chart. And ever since then, the market's continued to fall. We've had attempts to support the market. There was one there with high volume. But what you do when you see that massive high volume coming is you mark the top of that bar, the high of that bar, which is 1555. If the market was then showing strength, you would expect it to push up above the top of that bar. And you see here, it's never done that. And the reason it's never done it is because although there was buying coming in here, there was just too many sellers for the market to actually rally up. So the market's continued to fall. If we look over to the left of the chart, at this point, I'll put less bars up. You've got this bar here, it was back in November 16, which was when President Trump was elected in America. The market was marked up initially, and then it collapsed to close on the low. Now that bar is huge volume, and that's a very, very important bar. And if you look at this chart, and you look at you pick out these high volume bars, there's another one there, that's on an up bar. There's a group of them here. There's a little group of them in here, and here, there's quite a few of these high volume bars. And you look at where we are now in terms of price. All of those high volume bars are currently above the current price level. Now that's significant. That's telling us that all that high volume has now turned into supply. So if you try to push up in price, you're going to hit up against all these high volume bars. Now, there's buyers and sellers obviously in there. The sellers have made money. The people who bought up here are sitting on losses. And psychologically, if the market were to rally up to there, those people who had bought would want to get out and try and get their money back, which is what creates the supply or the weakness there if price rallies back up to that area. Now, if we look at this in a bit more detail, put 100 bars up, you can see there was a bit of an increase in volume on that last bar. It closed in the middle. There's just a little bit of temporary support coming on that bar. Now, if we move down to the daily chart, we can see it in a bit more detail. Here we are. So this bar here is the main one. So you've got a down bar closing in the high of the bar with an increase in volume. So it's showing a little bit of support. But if this market tries to rally, I don't think it's going to rally very far because you've got weakness from weakness up here around about 1250. There's a high volume bar there. There's these high volume bars up here. So if this market does try and rally, and it's probably due for a small rally because it's dropped quite heavily here, and markets don't go down in a straight line. Even in a bear market, you will see rallies occur. So at some point, you're going to see markets pushing up here. You'll see no demand. You'll see low volume up thrust, generally weak bars, which are telling you that there's no strength. Yes, there's been a little bit of buying coming in there, but it's not enough to turn that back into a bull market. Nothing like. So you're in a long-term downtrend. We could actually put a trend channel on here now. If you join these two highs, which I will do. So join these two highs here. One intervening low, which I'm probably going to take right back to, try that one. Now, I'll go back 2 bars because I like to draw it from the high volume bars. So it's not a perfect trend channel, but it's sometimes they don't form perfectly. It's about as good as you can get there. So you've come down, you're in the bottom, you've actually pushed down through the bottom of the trend channel, and you're trying to rally up, and you're struggling even to get back into that channel at the moment. So for me, this is clearly looking weak on a longer term position. Short term, you're seeing just a little bit of rallying, but I'd expect to see this continue to fall. Now, if we go back to the weekly chart, and I put 200 bars up, you can see your next low point over here where the market rallied from was down here around about the 1160 area. There's a bit of support there. If it breaks down through there, you're probably looking towards the 1100 area as the next area of support. And really, there's nothing more complicated than that. I mean, this ultra high volume bar, I think last time I talked about gold was several months ago, and it was right up here somewhere. And I'd marked the close of this massive high volume bar, and I said that if we could push above this sort of the top of this bar, which is at 1378 or thereabouts, if we could push above there and then test, that's what would be required to turn this market higher. And you can see it never happened. The market did push briefly up above one bar there, but then came straight back down and again here. It couldn't hold above the top of that ultra high volume bar, which again tells you there's clear weakness. So there's not really a lot more I can add to that. So back to you, Gavin.
Yeah.
Unless there's any questions.
Well, there was a question from Wiseone actually, and there's a question for Philip, please. When can we be certain? Now, can I stop that word immediately? The word certain in trading doesn't exist. If it did, everyone would make money. So never, ever look for certainty. Right, Philip? Because there's no such word as certain in the market. Otherwise, everyone...
There isn't.
No. And so for all of you out there listening, remove the word from your mind. I'm certain that's going to happen. You're not certain about anything. What you're dealing with is probability. Okay? Probability. And what you're trying to do as a human being is make money because you've managed to read, like I've done in the Canadian dollar here, the probability that that signal is going to work, and our probabilities are very high on that particular one, but I'm never certain. And I don't wake up in the morning saying, I'm certain. What I say in the morning, when I start my trading day, number one, I'm very grateful. That's the first part. The second thing is I expect to find trades. And number three, I've got the tools, thanks to Grigory and the team, to find those trades for me. And Philip included, because he developed a lot of this with Tom. That's it. But I don't go down there and say, well, I'm certain I'm going to make $5,000 today. Well, absolutely certain about that, you know, because if you do that, you're going to lose money. There's no certainty. Don't look for certainty in this business. If you want certainty, go and get a 9-to-5 job at Asda or a supermarket, and hopefully you'll get paid, because that's certainty. But there's not certainty in the financial markets. And if you are coming into that to make money and you're looking for certainty, you're in the wrong business. This is a business called risk. And if you want to read a great book, and there are several on the subject, actually. I'm just looking at my my shelf here of all the books. But one of the books that I've read was Den of Thieves by James Stewart, that talks about how even the big banks and the institutions look at risk and how they manage their risks and how they take massive risk sometimes in the market. Now, we know that the smart money are not as smart as we always think they are, because even they lose money. So please don't look for certainty, but look for this probability. Probability. And then when you push the button to take the trade, as I've done today, based on the information given to me by Smart Center Pro, based on the information that's in the system, I as a person then manage the position and say, yeah, that makes sense. And I put the stop to break even as quickly as I can. I'm calm. I don't get angry at all if it goes against me. If I get stopped out, I get stopped out. It's part of the business. But when I make a good trade, and I've made some today, you just say, oh, thank you very much. That's how you trade. And if you do that, you'll find it's a much more enjoyable experience than getting frustrated and angry and actually getting into the trade too early, fighting it, all of those things. So that's the first thing. The second thing I'd say, Philip, would you agree with that? I'm just looking at some of the.
I would, and I was just writing something earlier before the webinar, and I was writing about trading, and the last words I used was, make sure you enjoy it. Yeah.
That's interesting. Yeah, absolutely. If you're passionate about the business, enjoy. Exactly. So let's finish off then, because I know there's a lot of questions coming in. I'm going to post in now the link to the survey. And this will, if you really would like to be pointed in the right direction to help you, which is what we're here to do, then just complete the survey, and one of us, it won't be me actually, because I'm packed, but one of the team will get in touch with you. This is the link, and I'll probably post this on YouTube as well, because we're going to leave this survey up because it's been so popular already. And what it allows us to do, instead of just guessing what you need, if you're a new person, it gives us information that helps us to say, this is what we think you should do. and this is your budget. And I know I've seen a couple of people type in, look, I'm trading a real small Forex account, and your software looks fairly expensive. Is there anything you can do for me? Of course there is. And it's not expensive. Actually, there's plenty of ways that you can do what I'm doing here today on a budget. And there's ways we can help you. I'm just about to buy a new car, and I don't want to spend a lot of money on it. But the way is the car dealer is great. He's like, well, I can do this, I can do that, I can do that, I can do this. And he's got all these ways of packaging it. Very clever. But this is what we're trying to do as well. Let me show you, finally, and if you've got questions for Philip, you can type them in now. Let's go back to the end of a rising market, because I hope you'll realise the importance of this indicator and the importance of finding it so that you can yourself find them. And they happen in Forex, they happen in futures. This happens to be a futures contract, but it happened in Forex as well. So here is our indicator. It's a climactic bar. Now, in order for you to find out why that's important, and our good friend at the Gibraltar Stock Exchange, Nick Cowan, who's the MD there, actually uses this indicator a lot. And it's very specific, and it doesn't appear often, but when it does, we know about it. How do we know about it? Well, because of this. We have got a system that emails us when that indicator appears. That's part of the base charting package and Smart Center Pro. In Smart Center Pro, I get the alert the second it appears, and this time it was 15 minutes it appeared. But so it didn't make any difference, because I had 15 minutes to execute my trade. But sometimes these appear on a 1 minute time frame while I'm sitting at the computer. And whilst the email comes in, you might get a lot of them, you may miss it. The good thing about the Smart Center Pro is it gives you that audible alert that you're hearing in the background, that police siren that you hear. That's completely customizable. So you've got the alert, it's -5. Okay, so it's going to tell me that it's the 6C, the Canadian dollar futures contract. It's going to tell me the time frame. The bigger the time frame, the bigger the potential move. It's going to tell me the time and the price that it's appeared in. So I know exactly, and it's going to tell me the alert is the police siren. Why am I using a police siren? It catches my attention if I'm making a sandwich in the kitchen and it goes off, and I've got speakers in my office, which means I know something's happening because climactic action has just appeared. I go to the chart. I see there's an end of a rising market signal. I see it's confirmed by the next bar. I missed the entry. I could have got in much earlier. But nevertheless, we saw here the change in behaviour in the market. There's the trigger number. Philip talked about that bar. I talked about that bar. I could have got in much earlier, actually, but nevertheless, we took the trade. And now, as we look here on the 6C, it's up on one lot. By the way, this is a one lot trade. And please let me be very clear. If you want to check, this is a live account. So we're not trading funny money. This is real. And it's the same with all of the things that we teach people, is that if we're real traders, you've got to believe that we are real, first of all. We're working very closely now with Gibraltar Stock Exchange. We work very closely with the CME Group and Infinity Futures. The platform, I was asked, I've just had an email, what charting is this? It's Infinity Futures. Okay, Infinity Futures is the platform that I'm using, and it's a white label of the Sierra Chart platform. And they've white labeled it very successfully, in my opinion. It works beautifully. And I'm just then following some written rules that are written, and they're on our website. And if anyone's confused about what we offer, and the easy answer is to do what I've just said. Go to this web page here, which is the Survey Monkey link, and I'll post this in the room so everyone can see it if you're on YouTube. I'll leave that up for a second. That's going to be live for a long time as we build our team, and that's the best way we can help you, seriously. So you may look at our website and say, oh, listen, I'm trading Forex with a £1,000 account, and Gav, I can't do that. I can't do that. Trust me, we're here to help. That's our business model. Has been for 18 years. And in fact, we were looking, since we brought the company from Tom, we're 32 years old. So we're not a company that's a fly by night. We're here. Most importantly, though, for you as an individual, we understand everyone's different in this business. We cannot put a website together that appeals to the masses like Apple with their iPhone and their iPad. That's an easy one, which is why they probably make so much money. We're very individual. We know that you are all different. Some are beginners. Some have got very long experience of trading. But I promise you, we have one thing. We have a system that if you're prepared to put in a small amount of effort now, it's not a lot, and you're prepared to put in a financial commitment to us, we will help you. And we don't do free trials. So don't stop emailing me, everyone, can you do me a free trial? And the answer is no. And the reason is this, because we offer a very high level of support at the back end, right? Including training and webinars and all sorts of things like that. And that has a cost to our business, which I have to pay. And that's why we make our customers have skin in the game, so to speak. And we do that because if you have put your financial commitment to us, then we can return that and do our best to put you in the right place in your current circumstances, wherever they may be. And that's what we do. Philip, before I wrap up, and I'm going to close the webinar in a second, any advice you'd give to people? There's a lot of new people here today. What sort of advice, you've been down the path, obviously, years ago. What advice would you give?
Well, today it's a lot easier because we have the advantage of the internet. I mean, Gavin's sitting in south of the country. I'm sitting in the north of the country. I'm talking to everybody. You're coming from all over the world. We didn't have that advantage 15 years ago. So it does speed up the learning process. But the best way of learning is constant practice. And if you want to really learn about VSA, obviously read the books, Tom's newsletters, which are available on the website, I believe, is another really excellent example. You can follow through week by week the markets, Tom talking to you in his newsletters. And the other thing is get a cheap end-of-day data feed, which is very, very cheap. Sometimes you can get them online for free even. And go through and look at lots of charts, study the charts, and go through and understand a lot of what we've talked about, particularly in the books and Tom's newsletters. If you do it on there, you can actually do it for yourself. And if there's anything you don't understand, you can make notes, come back to it. And I always found that was the best way of learning, going through lots of examples and charts and trying to work out what I didn't understand and why. So that would be my advice.
Yeah, no, I'd agree with that. So guys, look, fill out the survey. Especially if you're new and you're thinking about getting involved with our business, we'd love to help you. Existing customers, just so you know, we have a new version of the software being worked on right now. You will be the first to know about it. You will have a demo of it personally, and I will be doing the TopBot webinar possibly around the same time because we will be adding stuff that you haven't seen yet. And it's for the plugins at the moment, so it's for the plugin versions. But it will be based very much on support and resistance levels, which is very important, as we know. And then, as I said, very, very key to this whole lesson today, I hope you'll accept it anyway and realise that this indicator here, when it appears, okay, is a very key part of the strategy in VSA. And what we do is we identify the indicator. Let's move the trading ladder down. And we say, okay, when we see it and the market's going up but the volume's excessively high, we move down the time frames, which we've already preset in the trading strategy for you. There's the 5, okay? Here's the weakness, supply. Here's the 4. Here's the weakness, supply. Here's the 3. Here's the weakness and here's the weakness, no demand. Very interesting. On the small time frames, it's confirming what's going on in the big time frame. So now you've got low volume on the up bar into the same area where the high volume is. That's confirmation, as we call it. The 2-minute chart, same deal. This isn't difficult to learn. Seriously, it isn't. And then the 1-minute chart, everything's rolled. And there was, where the end of a rising market appeared on a 15, it already started on the 1. And that's why we took the short. So with that said, I can't see any more questions. Yeah, Razwan, that is absolutely true. The narrower the spread on the end of a rising market bar and the bigger the time frame, the better the move, just so you know. I've made $100 so far out of this trade with one lot at the fix. when I see that on a daily chart, and we've got scanners, and I didn't cover stocks today, unfortunately, I didn't have time, but I will do a dedicated stock trading webinar on how to identify those signals on the weekly, daily, and the 4-hour charts. And I'll try and do it this week, because I haven't covered it today and I wanted to. But the reason I didn't cover it, and I apologize for those of you who are stock traders, is the principles work in all of these timeframes, but we had the setups appear through the email alert system, and I had to take the trades. I had no choice. And one of the things I've learned is that if people understand and see this live consistently, they know that A, we're telling you what we're telling you is correct. B, we're taking trades, and C, the market's moving based on the principles, and you can see it for yourself. And there's very few people out there that do that. And hopefully that will help you to make your decision to become a customer of our company and join us. So with that said, Garrett, I'll be connecting with you. Philip, I'll call you straight after this so we can have a quick chat. I've got something important to tell you. And other than that, to all of you, let's just have a quick look. Actually, yes, the lower time frames absolutely have end of a rising market. And again, look, if you're not sure, this is what you do. Really straightforward, right? You can fill out the survey, option 1, or alternatively, you want to go and do a bit of research. Just do this. Go to TradeGuider.com, our website. If you haven't got my book, you can get it by putting in your email and your first name in here, and you get the book and the video course that goes with it. Go to products and services, hit the software button, and hit on any of these buttons here, which tells you what we are offering. And we have professional versions that are aimed at the banks and the institutions, and we have retail software, which is just the basic VSA charting package. They all do similar things, but in different ways and for different prices. And again, I'll stress, we want to help you. Let us know what your budget is. Let us know where you're at. We'll put something together. Okay, I think that's good. All right, Philip, I'll call you next, and then Garrett, I'll call you straight afterwards. So we'll speak. And again, if you need any help at all, the other thing you can do is email my wife, which is Laura, Laura, at TradeGuider.com. Obviously, she has direct access to where I am. It's just Laura, Laura, at TradeGuider. And I've just posted that in the window there as well for those of you that are on the webinar here. All right, let's just finish off and have a quick look, and we'll see where we're at. Moving sideways now. So, yeah, but there we go. That was the 15-minute chart. Now we're looking at no demand here, and if that is confirmed, I shall probably stay in this position. So, from all of us at TradeGuider, from the whole team here, we wish you good trading, constant profits. God bless you all. Thank you very much indeed for your time today. We wish you well. Bye-bye.